The United Kingdom has witnessed a year of poor economic data in 2023. The inflation has dropped sharply from the highest point in decades, but huge challenges remain for the year 2024.
Latest data show the UK's CPI rose by 3.9% in the 12 months to November 2023, the lowest since September 2021. However, the inflation rate is still almost double the 2% target set by the Bank of England. Also, the cost of living pressures remain high. Data showed food prices in November 2023 were 29% higher than they were in September 2021, and energy prices were 66% higher. Strikes continue to cause chaos to health, transport, and other areas of daily lives.
It just illustrates why inflation is such a dangerous thing. It particularly, it comes on very fast, as this one did, and unexpectedly. It causes complete pandemonium by changing the real value of things that people have, or in the way of wages or assets and so on and so forth. That's why it's so important to have monetary stability that keeps inflation in its box.
Meanwhile, latest data show the UK economy contracted 0.1% from July to September and is at risk of recession. The GDP showed no growth between April and June. The expert pointed out that taxes raised hugely by the UK government could jeopardize the long-term growth prospects in the UK.
Well, I think the big mistake was made by the Sunak government of raising corporation tax, which is a very critical tax for business confidence and incentives. So they've failed to index the tax thresholds, which has pushed more and more people into very high marginal tax rates, which is very bad for incentives of business too.
Looking forward, the central bank expects the UK's GDP to be broadly flat in the fourth quarter of 2023 and 2024, and then have a paltry 0.25% growth in 2025. The expert called on the government to take measures to boost business confidence and long-term growth.
The great mistake they made was to think very short-term about trying to get debt down by raising taxes, instead of hanging tough on taxes, keeping taxes low in order to rebuild growth. The focus of the markets and the focus of government ought to be on the long term. What we need to worry about is the debt to GDP ratio in the long term, which depends crucially on the growth rate. That's the logic of the debt ratio and the whole solvency discussion.